Hello, everybody. Welcome to today's midweek update. The market has been steadily improving, and we'll take a look at the major indexes. We'll take a look at some ETF. We're going to take a look at a whole bunch of things. And the thing that I'm going to look at right now is why am I on Echo? Well, let's see. Well, what's happening back here? Oh, I've got another screen that was opened, and that's why I was echoing for a second there, but that's okay. That's fixed. So, for those of you that are here joining us right now, thank you. Uh, Type into the chat. Let me know where you're watching from. Let me know what questions you have throughout because we'll be answering your questions live. And by we, I mean me. So let's hop into the charts and take a look at what is going on here. So we've got the major indexes. I always like to start by taking a look at what the major indexes are doing. We have the S&P 500, the NASDAQ, the Russell 2000, the New York Stock Exchange, the Dow, and down here we have the IBD 50. So you might be saying to yourself, that sounds like a lot of stuff to look at all at once. It gives a very good perspective, and here's why. The reason why I like to see all the indexes laid out together is so that way at a glance I could see, are they all moving together, or is one moving that way, one's moving this way? When they start to move in different directions, that's where you start to see a lot of chop. And you could especially feel that chop if you're trading stocks, individual stocks, just like how I am. If you're trading individual stocks, let me know, type into the chat. What we're seeing right now is the indexes consolidating, and they're all consolidating in a nice tight range. And the thing with them, in that they are all consolidating in a nice tight range, is that it creates good reward to risk. Now, not just reward to risk on the indexes themselves, but also in growth stocks. Now, here's something that hasn't happened in a while. I told this to our members last night. What happened yesterday that hasn't happened in a while was this down here. What happened here was that the IBD 50, so stocks that are growth stocks. So if you're a growth stock trader, you're probably seeing more growth stocks start to break out, start to make moves. So when you get a confirmation signal like this one, you want to take notice. Now, it's not the end all be all. And, sometimes it's very easy to get caught up in finding one indicator that's a confirmation thing, and then you get real excited, and then you want to start plowing in, right? And maybe that works for a day or two, and you start to get a little bit excited. Then what can often happen is that you start to relax on your rules, and instead of focusing on what you have written down, you start focusing on all this. And when you're focused on all this, or if you're focused on your P&L and you're focused on basically everything except for what you have written down, that's when the trouble can start. Back to this. So we've got the indexes consolidating. We have the indexes not just consolidating on daily timeframes, but also on weekly timeframes, also on monthly timeframes too. Great. Indexes are constructive. So what are stocks doing? What are stocks doing? Here's what stocks are doing, right? And we'll come, you know what? We'll switch over to Deep View. Do we have any Deep View users in the audience? Let me know if you guys are using Deep View. Deep View is a relatively new screener. It is similar to Market Surge. So for those of you that are Market Surge users, or how I used to call it Market Smith. Actually, like the name Market Smith a lot better than Market Surge. But anyhow, that doesn't matter. But what does matter is that I started using Deep View. I like Deep View quite a bit. It's almost like if Market Smith and Trading View had a baby, this is what it would be, right? Because the charts are the same as Trading View, but you get the same kind of stats or most of the stats, most of the data that you do in Market Smith, and I find all that very useful. One of the things that this thing can do is you could produce a heat map of any list that you have, right? So what I'm going to do is I'm going to come over to my watch list, and I have a whole bunch of different watch lists in here. First, I want to take a look at my universe list. So every week, I'll screen the market. I do this once a week. I screen the market for growth stocks, and I'll add to and prune my universe list. I have a set bunch of criteria that I use. I put out a video last week or the week before about screening processes. You could go check that out. It's on my YouTube. Anyhow, what we're looking at right now is the current universe list, and we're seeing how it's performing for the week. So I don't know about you guys, but it looks fairly even, right? It almost looks like 50-50 between blue and red, right? So what else jumps out at you? Type into the chat and let me know if there's anything about this heat map that jumps out at you. There's a couple of things that jump out at me. I'll give you the first one, and we'll start on the left side over here, right? What jumps out at me over here is that most of this is pink, right? This little box over here. So what's that little box? That's biotech. That's biotech. So what's that telling me? That's telling me that, all right, we have some consolidation in biotech. That's interesting. Maybe we start to see some setups come out of there. Maybe it becomes interesting for next week. Just something to keep in the back of the mind. Maybe something to write down. What else do you see? What else do you see? Do you see anything that's dominant blue? Yeah, there's some dominant blue as we scroll over this side. Well, what's this? This is industrials. Most of it is blue. Come down over here. Consumer staples. Most of it's blue. Come down over here. Information technology, including software and semiconductors. Most of it's blue. So where should we be putting capital? Should be putting capital in the blue stuff, right? That's what's going up. But not just that. You don't want to just see, oh, well, this is going up. Let's toss some money in here. You want to see which groups are acting constructively, and also which stocks are setting up. So over the last couple of weeks or so, we've seen this develop, and here are some of the stocks that we're in right now. Duolingo. Duolingo broke out way down here. And we'll just put up the daily chart. Broke out way down here. Steady rise. Didn't threaten any kind of shakeout or anything yet. Had a brief consolidation over here. In fact, I would say that it's still in this consolidation phase. It barely touches the 10 EMA. It did that on Monday. And so far, it's rebounded. Which group is it? It's in that tech space, right? On to the next one. Palantir. Same thing. Gaps up nicely. Creates a nice gap up entry. The way that I like to trade gap ups. And For those of you that are that come to our meetings, well, we meet once a week. Well, with the group coaching, I see a couple of people that are a part of the group coaching. Shout out to Bruce. Shout out to Caleb. You guys know that how I trade a lot of this stuff, because one, you're seeing it in our meetings, you're seeing it in our Discord, and you're also seeing it in our daily videos. So back here, for everybody else, for your benefit, the way that I treat gap ups, when I see a gap up like this, the first thing that I'll do is I will measure it from top to bottom, and I'll see, does that create a clean enough entry for me? Well, in this case, the risk on it between the top of the gap and the low of the gap, over 6.5%. That's doable, but that's still a lot. So I like to see a little bit more tightness. I like to see a little bit more tightness. Then we get a little bit of a pop. Then we get some consolidation, and then it starts to go. So, well, what are we able to do? We're able to get in right here with just 3.7% risk instead of 6.5%. What does that do for us? What it lets us do is it lets us do one of two things, or you could do some variation thereof. It allows you to either take half the risk that you would have taken on this thing, right? So if you see every trade that you take as, okay, I need to reach into my pocket, slam some money down on the table, and say, all right, here's what I'm going to pay to see if this thing is going to work. Well, you could pull out half the money from your pocket and to see if it's going to work, or you could pull out twice as much and have the same amount of risk, right? This is where position sizing comes in. This is why Van Tharp, right? If you don't know who Van Tharp is, definitely Google the name. He was written in Jack Schwager's Market Wizards. He also has a litany of books. I have most of them, including his Super Trader course. The thing that he taught was that so much of trading comes down to your position sizing, right? Well, whether you win or lose it in the market, a lot of it comes down to your position sizing. Interesting. So if you have a high probability trade and you're able to put on bigger size on your higher probability trade, that's part of what's going to help your equity curve rise and help it to rise faster. When you are in a low probability trade or a low probability situation, you start to size smaller. That's one of the things that helps to limit your drawdowns. That's one of the things that has helped me be in this game for so many years, right? If I weren't, I couldn't be speaking to you right now. So Palantir, low risk opportunity. This takes off, gives another opportunity over here, takes off again. What group is it? Software, technology, right? Same space. That's where understanding some of the heat map stuff that we mentioned a few moments ago, that's where all this stuff comes in handy. Looking at all this and trying to soak it all in, yeah, I understand how that can be a little bit complex. It's a lot to take in. That's okay. What we need to do is to have a structured way of learning this stuff. We need to figure out what are we going to learn, what's noise, what isn't noise, because otherwise we could be running around like a chicken with our heads cut off, trying to listen to every story that's out there, tuning into, I don't know, X or Stock Twits, if you guys are on there. And stuff could get very confusing. Everything that we're talking about right here, this is all kind of stuff that I would do when I was trading part-time, when I had my full-time job 6 years ago, right? I've been doing this full time now, the operating my own business. Never thought that I would be operating my own business, but here I am. When I took that full time 6 years ago, before that, still doing the same kind of stuff, right? The difference, or one of the differences, is that now with a tool out like this, it just gives me a better visual representation. But I was still doing this kind of work, looking at spreadsheets, right? And going through a universe list in a spreadsheet, flipping through everything and doing this kind of stuff manually. I was still able to do that while having a full-time job. And the reason why it worked is because I knew exactly what I wanted to look at. Right? I knew the types of things. So it's not like, you picture, the you ever go grocery shopping? Right? You guys go grocery shopping at all? Type into the chat. Let me know if you do your grocery shopping. I'm the kind of guy that, well, when I do grocery shopping, I like to have a list. I like to have a plan. And I walk in, I know exactly what I want to get. I know where these things are. Go get them, throw them into the cart, and I'm out the door. Then you have the other people, right? They're kind of walking around with the cart, just kind of, or like kind of leaning on the cart like this, walking around in the aisles. Oh, look at this. Look at that. You could spend like a day just doing food shopping that way. The same kinds of things happen in the market, right? If you don't know what it is that you're looking for, this is a mess. Now picture that times 10,000, right? Because you've got 10,000 stocks in the market. Knowing what to look for is crucial. Knowing what to look for gets you results like this. If TradingView can load. If not, fine. You don't want to load, we don't need you. This is another reason why it's good to have backups, because you could come over to here and just type in any of your stuff, right? So here's SFM. Another one. Price breaks out. Decent run so far. And all these. I keep notes. I keep tabs on every single trade that I take, when I take it, what my plans are going to be. Here's where we're at right now. 32% on Duolingo, 23% on Palantir, 6% on SFM, 8% on App, 6.5% on Reddit. Might be more than that. I don't know if this thing is fully updated yet. BIRT, 1%. And then these guys were just added today. GoDaddy and GGAL. I need to put in this stuff here. So let's see. 154.90, and adding the current prices of these things would help. And yeah, these just started to move. Oh, look at that. GGAL up almost 3% already. Not bad. But when you take all this stuff in, what it helps you do is know when to press, when to pull back. Right? Well, when you start to see the market setting up, right? When all the stars start to align, that's when we want to press. Now you might be asking yourself, well, what does that even mean? What does it mean when all the stars are aligned? Does that mean that I should be looking at the indexes? Does that mean that I should be looking at stocks? Does that mean that I should be looking at personal performance? Well, if you are trading stocks, those are the three things that I think are worth your time. I think that you should know what the major indexes are doing. I think that you should know what the stocks that you're interested in are doing. And I also think that you should track your own personal performance, because when you look through those three lenses, it's giving you a nice three-dimensional view of the market. You get to make any rules that you want for trading. You do. You do. I do. Guy down the street gets to make rules. We also get to decide if we're going to follow those rules or not follow those rules. I'll tell you this though. Every master trader that I've met, every master trader that I've become friends with, I've become friends with many, any master trader that I've read in all the books that I'm sure you guys have read too. Every single one of them had rules, they had plans, and they followed them. None of them were shooting from the hip and making money consistently. They all had rules, they all had plans, they all followed it. The difference, and so let's say that you're somebody that has trouble following plans, right? Who hasn't had trouble following the plans? We've all had trouble following plans at one point in time. So did the masters. The difference between the masters and maybe where you're at is time, right? They give themselves enough time to be like, all right, I'm going to eventually learn this. I'm going to stick with it and stick with my plans. And eventually they saw it to the other side. Does that mean that it was easy? Of course not. Is it easy for me? No. I've been doing this for 25 years. Is it easy? No. It's become habit. I've made steps to improve. Am I perfect? Heck no. Definitely not. Do I still make mistakes? Yes, I do. Yes, I do. Do I take steps to correct those mistakes? Absolutely. Is it a part of my business plan to review everything, to track everything, to review everything, and then see what steps to take to improve? Yes. Yes. If we don't have that part baked into our plans, then guess what? You've got a hobby, right? You've got an expensive hobby, right? Let me know what questions you guys have. Go ahead, type into the chat. Let me know what questions you guys have. We've got about 10 minutes left. Let's see if TradingView is working. I think I might need to reboot TradingView. Let's reboot TradingView. But let me know what questions you guys have. Yep, there we go. We had more stuff triggered today as well. Even this here, Sentinel-1, ticker symbol S, breaking out of a big inverted head and shoulders. You can see it fairly well on the weekly chart. This has been consolidating since February. And what happened, right? This broke out this morning. I did not take this one. I had it on the radar. I didn't take it. Here's why I didn't take it. I wanted to see how price would break out on at least on the 30-minute time frame. I wanted to see if it had the volume. So far, it does have the volume. So at this point, I would be waiting for a pullback to buy. Right now, we're getting into a little bit more advanced techniques. So why wait? Why wait? Any of you guys from the good coaching, you guys are able to answer? Go ahead. Let me know why I would wait on this. I'll take a sip of water while I'm waiting for you guys to answer. Also, and for anybody that's here that's watching, whether you're watching over on YouTube, whether you're watching on X, well, we've got some people watching over on Facebook. Hello. Go ahead and tell me why you think you'd wait. Caleb says not enough volume. No, it actually does have the volume. It did have the volume over here, right? So one of the things that I look at is the dollar volume on the 30-minute time frame. My friend Stu coded this for us and he shared it. So what this is doing is it's taking a look at the volume, the dollar volume, uh, and it's taking a look at it at each point in time relative to that point in time. So, for example, this is the open right here, right? 9:30 Eastern. It's blue. What does that mean? It's taking a look at all the other 9:30s and it's saying, is volume above average for this particular point in time? It's blue because it is. So it does have the volume there, but why wouldn't I take it? Why wouldn't I take it? Alberto says, need a low risk stop loss level. Yeah, it has that too. Right? The difference between where I would like look to enter, right? So I like to get in on advanced entries. I always like to try to find spots where you're either going to have momentum coming through with a lot of power, or or where you have a fairly good stop loss placement. This, as it was coming up through here, you have not quite the weekly low, but what you do have are three moving averages. You have the 5, the 10, and the 21. And not only that, you have them all starting to curl up this way. So that's something else that can almost act like a trampoline when if price were to come back in, you're likely to find buyers stepping in right there. So why wouldn't I buy this? Was it a mistake? The reason why I didn't want to buy this was because number one, it broke out first thing. So at this point, I'm waiting for a pullback to see, all right, am I able to get in closer to the pivot? Because if I buy it now, after the volume's confirmed, instead of having 5% risk, I need 7.5% risk. That's not terrible, but it's more than I like. Second thing, we take a look on the weekly chart. Where did price get to? I drew this descending trend line yesterday. Price got right up to that descending trend line and it paused. This is a fairly long-term level, right? It's drawn all the way back from February. So it's going to take some real power to get through that. So now we're in a scenario where, all right, price has to punch through that with loads of power, or we're likely to see some back and filling, meaning that, all right, price could pull back from it, which it actually has so far. And maybe you get something where you consolidate a little bit more like this before you start to break out. I like trades where the odds are really stacked in my favor. This one, pretty good. Pretty good. If you're doing short-term swing trading, right? We're planning to hold for a day, maybe two, maybe three. Not bad. That's a nice little pop there. If you're looking at something where, I don't know, maybe you tighten your stop up like this, right? And then all of a sudden, rather than selling at a 5% loss, you're only risking about 1.5 and you've made 4. That's pretty good reward to risk. So in those kinds of scenarios, yeah, right. It depends on style. It depends on the trade. We're all looking at the same names, right? We're all basically looking at the same names, as the same stocks. So many people get caught up in, I need the latest tool. I need deep view. I need market surge. I need trading view. I need this. I need that. We're looking at the same stuff. It's not the tools that are going to help you. Do you need tools? Yeah. The same way that a carpenter needs a hammer and a screwdriver. Maybe he's got some power tools, but if you don't know what you're doing, if you're not skilled, you're gonna build a wreck, right? It's not the tools, it's the practitioner, you. You need to improve your skills. What separates you from Mark Minervini, from Leif Serrata, Oliver Kell, any of the US investing champions, any of the people that you've read about, the difference between you and them isn't some tool, it's skill. That's why I wrote that book right there, The Trading Mind Wheel, because you need to focus on skill development. You need to know what skills you need to develop and how to develop them and why they're important and how mindset is a part of all those things. Let's see, what questions have we got? What other questions do you guys have? While we are getting your questions in, I want to mention our daily newsletter. Right? We started sending it out daily. Once a week wasn't enough. We needed to send it out daily. So if you're not on our free newsletter, the ticker is scrolling across the bottom, marawealth.com/newsletter. Go get on the newsletter. You're going to learn a lot of stuff through there, daily tidbits, all different things education related. Every now and again, I'll give a trade update if I'm able. If I see a teaching moment in a trade, and I love teaching, I love coaching, so that's fairly often. I'll talk about that. The purpose isn't for me to say, "Oh, buy this stock. Oh, buy that stock. I like this one. I don't like that one." It's more about giving you the thought process, the rationale. So that way you're not waiting on anybody to take a trade. You're able to go out and make these decisions for yourselves, and you are confident and capable of doing it. Let's see. Got a few things coming in here. All right. Caleb says, where would you scale out of GGAL? It's had a nice move so far. Let's take a look at GGAL. This is one that I bought. I bought it earlier today. I haven't looked at it in a little while, but let's see how it's done so far. Oh yeah, look at that. Up and away. So on this one, my first planned scale out is going to be just below these highs here. Just below those highs. Right at around, say, 46.90. 46.90. So that's a little bit more than 1 times my risk. Now, you might be saying to yourself, that seems pretty shallow, 1 times your risk. Why would you start to take off something there? The reason why I would start to take off a little bit there is because we're getting close to prior resistance. Those are the kinds of things that I like to look at when I'm trying to think through where, when, and how am I going to take my scale outs. I like to factor in where is resistance. So just below the prior high, just at this former place of resistance, that's where I would look to take it. And it looks like it's well on its way. Now, let's say price gets within an eyelash of that today. Would I take it a little bit early? Sure. Right? It's about locking in gains. We want to lock in gains. We want to lock in profits. We want to take our initial capital risk off the table as quickly as we possibly can. That's how we can keep on stacking our chips. That's how we could keep on filling our pockets. If we don't take the profits when they're there, then they'll eventually go away. We need plans to how we're going to lock in gains. We need plans on how we're going to prevent losses. And it's not that my plans are written in stone where this is handed down and you need to follow it. What we all need are plans that work for ourselves. How do you get plans that work for yourselves? Model success. Start there. That's what I did, right? Studied O'Neill, studied Livermore, studied Darvis, studied Minervini, and a whole litany of others. Start by what I'm doing, right? Build off of that. Everybody that's come before has built off of their predecessors. That's how you're able to advance a lot quicker. None of us need to start from scratch. Caleb says, I didn't take profits in July when I should have. Then stuff started to go down and I averaged down because it had come back. That really screwed me and I am still digging out, but on track. And yeah, that's Caleb, that's a lesson that many of us learn the hard way. It's a lesson that many of us learn multiple times the hard way. Hopefully it sticks. What I'll do every month, I'm going back through my trades. By going back through it once a month, right? You could do it more frequently, right? And for my open trades, I'm reviewing my open trades every day. And I'm reviewing sizing in my most recent trades and how that's affecting things. I do that every day. But as far as like going back through past trades and really digging in, I'll do that once a month. And in doing that, it reminds me of the mistakes. So that way, yeah, that doesn't feel good. It's still fresh. So it helps me to not make those kinds of mistakes again. It also helps me to, if I'm say I had a couple of losses in a row, it helps me to not feel as bad because I'm able to see the bigger perspective. I'm able to see, oh wow, you know what? Yeah, I have a couple of losses right now, but that's not uh, that's not defining me, right? Because I take a look at the full body of work, and it's just like, oh yeah, look at this, like a couple of losses here, but I'm also sitting on like all these other profitable trades. Did I follow my rules? And it's really good for perspective. It's really good for mindset too. Yeah. So, any other thoughts, comments, questions? Yeah. Gave back 15 grand, 16, 512 to be precise. Yeah. Forget how much was the most that I've given back. But you're certainly not alone in having given back profits. I think that it's not that giving back profits is the problem. The problem is adherence to rules. We want to have rules. We want to follow rules. We want to have plans. We want to follow plans. If there's some people that are very comfortable sitting through a deep base. So you might, if you have somebody that says, all right, here's Duolingo, and I want to let Duolingo come into the 50-day moving average, and that's my rule, right? There's some people that are like that. I haven't spoken to Jim Ropel in a while, but he's somebody that would hold through deeper bases, right? At least to the 21. So where is Duolingo relative to the 21? Give back 8%. All right. What if he wanted to let it go to the 50-day moving average? 20%. If he's doing that, okay. That If it's a part of your rule, it's a part of your rule. What's important is that you're not following Jim's rules. What's important is that you're not following Mike's rules. What's important is that you're following your rules. The way that you build conviction to follow a rule is all the stuff that I'm talking about in that book, right? You need to do the actual testing. You need to do the actual labor of going through, testing the strategy, seeing how they work like this, right? Go to your charts, replay your charts, right? If I wanted to say, oh, well, this looks like it's setting up in a double bottom. Let's see how this one plays out. I just went back in time. I advanced the chart day by day, and I could see how each price bar develops throughout the day, and you could get a real-time sense of what it would look like, right? And here it's starting to break out. At one point during that day, right over here, how you feeling, right? Maybe some other stocks are starting to break out, and this one looks like it's stalling, and you know it. This is how I started to come up with rules about danger signals, which I also talk about in the Trading Mind Wheel book. And now how I also came up with rules on I'm not going to look at how many danger signals there are until the end of the day, because a lot can happen between now and the close. And here we are, right? So anyhow, I hope all that was helpful for you. If you did, please leave a comment below, like and share this so that way more people can discover it. And I will see you back here on Friday for the Traders Mind Chat show. Till then, take care. Much love. God bless.